Hey everyone, this is the Trader Investor. In today's video, I'm going to do a lesson on cryptocurrency. That's going to be the main focus here. And the reason why I wanted to start with this is because as retailers, we are made to believe that crypto does not have any manipulation. Institutions do not participate in crypto. Don't get it twisted. This is what they want us to believe. That is not the reality. They are taking advantage of the crypto moves day in and day out. No questions asked. They're not going to just sit here and let retailers make all this money while they do nothing. That is absolutely not going to happen. Nobody's going to let that happen from the institution's point of view. They are heavily participating. They come out with headlines and say, we don't like crypto, it's not centralized, therefore we're not following it. Don't buy into their crap, because they don't want you to trade logically. They don't want you to look at trades the way you should look at technical analysis, just like you do currency, forex, fiat currency, just like you do stocks, futures. It's the same game that they play with us over and over and over. Everything repeats. So I want to show you why crypto has collapsed. And every time when there's some collapse, there's some driving force behind it that want the price to come down to a certain level. It just doesn't haphazardly happen. China makes an announcement and Bitcoin collapses. No, there's a collaboration between institutions and big banks, big central banks, big decision makers. When they want to have the price go down to a level, they'll make an announcement, or when there's an announcement coming, they're prepared for that announcement and they start driving the price to a level that they want to take it to. Very critical to know this. Therefore, we're not caught on the wrong side all the time, right? Do I buy at the high and hold? Do I sell when it's up here? We don't want to get confused in all of those. Institutions manipulate crypto just like they manipulate fiat currency, just like they manipulate stocks, options, futures, commodities. Everything gets manipulated. It's their tactic to scare the retailer to take action out of fear and leave money on the table, lose money, have crazy stops, get wiped out because of margin calls, because we do crazy things, stupid things, really stupid things. That's what they want us to do so that they can collect our money. So how do we get an edge? We just trade with them. We never trade against them. That's how we get an edge. So let me come back and let me finish my rant here and just come back to the cryptos. And I'm just going to focus on a few: Bitcoin, Ethereum, Litecoin, Ripple, Lumen, and Cardano. These are the 7 I'm going to focus on today. This is what you see on my watch list. These are the main ones that I look at for just the general crypto direction. When these are heading really south, there are always those anomalies that go the opposite direction. One goes down, the majority goes down, and these go up. We'll take advantage of those, but in general, when crypto is going down, you want to see why. If Bitcoin has the way it's been moving, when it's moving down from 64 to 32, losing more than 50% of its value, there is something wrong. And we want to take a look at that. So I start off with a weekly chart. You can do it on a monthly as well. I just find it on crypto, it's easier to just start with the weekly chart. And on the weekly chart, I mark off the major swings, the major swing highs. Right now, because it's in an uptrend, in a downtrend, you would do the same thing in reverse. But right now, my focus is in the uptrend. So I mark the major swing highs from the past. Two things happen. When we break out of a major swing high, the first time we have a significant pullback after the break, pullback, resume that direction, price is going to want to come back and test that pullback area. I don't know why that is, but you'll see this often in fiat currencies as well. As soon as you break an area, there's a pullback. Somewhere down the road, they're going to come back and test that area. The logic behind it, I have not been able to figure out, but understanding that this can happen, it gives me an area where I have buy orders if I'm seeing some significant move that I want to get ahead of. So that's the first thing. The other thing is, I always talk about order blocks. And like I said, institutions participate in crypto just like they do fiat currency. So in crypto, you do the same order blocks as you would do in other currency pairs. And so I do it based on my daily. So once I've identified on the weekly my major swing points in the past, I don't need to do the current ones because we're in the downtrend. I'm just trying to figure out where we are. But, you know, down the road when Bitcoin goes back above 68, then this is a major swing high that we want to start to consider, right? This is important. And another major swing high is likely going to form somewhere as price goes here, and then you will mark it as well. But, you know, that's getting way ahead of myself here. So once I mark this major swing areas, I mark them in all the currencies. What are the major swing areas? I just mark them. For me, the purpose is just to mark them for now. In Litecoin, what you see interestingly is the highs that we made in Bitcoin and Ethereum in 2017, at the end of 2017, those highs were not breached until very recently for Litecoin. Litecoin was a very, very big lagger, and it just kept dropping. I mean, it had gone from 380 to, you know, the 20s and 30s. Those were some great opportunities to grab some Litecoin. For whoever did those things, they were pretty smart and took advantage of those. But again, I diverted too much. So on a weekly, mark the major swing highs from the past. XRP, of course, this is one that many people believed in, and it was really strong. It was really going high, and then they had the fallout with various lawsuits. It looks like they're going to come out of that. Again, go back, you know, above 3, go to 10 to 100. There's a lot of speculation on XRP. But again, mark off the recent major swings. Because what we want to see is, has there been a pullback after we breach those highs? That's what we want to look at. So we'll come back to all of these. Lumen, XLM, again, mark off the major swing highs. And then we did not break those highs from early, you know, 2018, late 2017 until this year. So something just to take a look at. And then Cardano. Cardano is a pretty fairly new crypto, but it's been doing really great. And so just mark off those highs. So why do we mark off those highs? Again, as a reminder, when price breaks out of that area, when it starts to make higher highs, higher lows, higher highs, higher lows, and then it forms a new base, meaning it pulls back, significant pullback, because you can measure this. This is two ways to measure it. We go from our swing low to that swing high. That pullback is nearly 38% retracement. So for me, you know, a greater than 23.6% retracement is a significant pullback. That's one way. The other way is just to measure the distance from here, from high to the low of the pullback. That's a lot of movements here. That's $13,000 in Bitcoin that was just wiped out in a few days. That's a major pullback. In crypto, it's, if you believe in it, there's no need to panic and sell. There's no need to panic and sell all the time, because crypto is here to stay. I believe, Bitcoin has a lot more room to go to the upside. Somebody asked me recently, where do you think Bitcoin is going to go? I said, well, it might reach the price of a Lambo. And then who knows where it goes after that. So there's a lot of room to the upside. So that's why we mark these swings after we break the highs. When we broke the highs down here of the June 19 area, when June 2019, there was no significant pullback. Price just kept driving up. We had that significant pullback in this year, at the beginning of this year in January. Then this is an area where I believe price will come back to. Now, don't just take my word for this. Take any chart, mark the weekly swing areas, look at where price breaks through that area, has a significant pullback, and a few weeks later it comes back to that area. That gives you a great buying opportunity. So that's why I marked these off. That's number one. Then the next thing is I go to the daily, and now from the daily, my purpose of going to the daily is to find those order blocks. And I'm not going to bore you with this exercise, but just as a reminder, an order block, a bullish order block in this case, for most of them you see are bullish order blocks, is the last daily bar that went down before price started to make a wild move to the upside, making a new higher high. The last bearish bar before price made a wild move to the upside, making a new higher high. That's my order block. So I go from the open of that bearish bar to the low of that zone. It can be that same bar, or it could be the next bar that starts to reverse but has a lower low. Then I go from open to the lowest tick. That's my order block. So that's how I have marked them for all of them. They're marked for all of them. All of them, they're marked. And I have marked just, I'll add one more here. This is a bearish order block. The last move up before price made a lower low. You will see a couple of those there as well. So we can mark those. Why do we want to mark those? Those will be potential targets. Those will be potential targets. And in my style of looking at order blocks, I know many people do it differently. There are some who leave them there forever because they think that price is going to come back to it. For me, once an order block is mitigated, and I am out of there, I am removing that drawing. I left them here for today's purpose so you can see where price was going, what price was doing. And then as we go through this teaching session, I'm going to start removing those order blocks that are mitigated. As a reminder, what is mitigated means? Very simple. When the institutions take the price down, knowing that they want to take the price up, they have heavy volume here. They put in a lot of dollars behind this move to trick retailers to keep going short and wipe out their stop losses. But they have a bigger size that they go long. And this size, it's significant. Even though the long is bigger, this is still significant. And they don't close their positions. The long is making more money than the short is losing, but they're not going to leave that loss go. They know they're going to come back and collect it. That's what I mean by mitigation. So price goes up. When they're satisfied by how much price has gone up, they'll close those long positions. They will distribute to retailers, unsuspecting retailers who want to continue to drive the price up. They will think that the price is going to continue to drive up. They'll keep buying while the institutions are selling. And now they're selling, they dump the price, take care of this order block. Once this is mitigated, that means this entry, as soon as price touches their open price, that's mitigated. There's zero loss. but they're going to push it down, and I usually say take it to the end of that order block because they want to make some money on that as well. For them, there's no loss in this position. They actually make money. They make money from their entry of 50,000 to the low of this wick, which is 45,700. So they make, you know, close to 5,000 per coin. And, you know, they're not stupid. That's why they're called smart money. They know what they're doing. That's why this order block is extremely important. Pay attention to order blocks. Pay attention to order blocks. Draw them. Pay attention to them. If you don't know how to draw them, shoot me a comment and I'll get back to you with a lesson. We want to make sure you understand this. So, now that we have that understanding, on the daily, what has happened? What has happened? Right? Let's go quickly to the weekly and look at this first. I said price broke out of the 2017 highs, that 20,000 area. It did not make a significant pullback until this year. When it had that pullback, we can anticipate at some point they're going to bring the price back down and test this area. That's one. Two, we have an order block sitting right there. And you know they're going to start to take care of these order blocks on the way down. What other things did I draw? I drew an imbalance. When price starts to drive up on the daily, I also added some imbalances. So imbalances. So when price drove up, and we know as an imbalance they want to take care of it, at least half of it. And if they haven't taken care of half of it, I usually leave it in. Now the imbalance is not as important as order blocks, but for me it's just a good reference point. If they have not come back to halfway point, there is a good chance they're going to come back to the halfway. And once they go past the halfway point, there's a good chance they'll come back and take care of that mitigation of the order block that sits right below it. Because usually right after an order block, they're out of there very quickly. They don't want any retailer to start making their losses small. They want to wipe them out as quickly and as hard as possible. So they're going to drive the price up quickly, leaving an imbalance. So when you have an imbalance, you want to see it taken care of. So because we knew when we broke out of this highs, of this 20,000 highs, we know price is going to come down to this zone, and we know price is going to come take care of one of these two order blocks, right? Somewhere between the high and low of that pullback area, that's where price is going to come down to. And where did price come down to? Somewhere near the low of that area. Beautiful, right? So just keep this in mind. Every time there's a wild move that breaks a major swing high, major swing low, price is going to come back to the first pullback of that swing. I don't know why that is, but they like to do that. I think they like to take it up, collect money, bring it back down, and find a second buying opportunity now to take it even higher. So let's keep that in mind. And now on last week on the 19th, on Wednesday, when China came out with the news, you already had a signal that they're going to take this price down. You already knew they're going to take this price down. How did you know they're going to take this price down that was from a high of 43,600 to a low of 30,000? 13,600 drop in one single day. How did you know? How could you have anticipated this? And if you had known that all they're going to do is come back and mitigate this and they're going to drive the price back up and I'm not panic selling, if you can do that, then you're sitting pretty, because you know they're going to take the price back up. No guarantees. But if you believe in crypto, if you believe in Bitcoin that is going to stay here for a long time, then there's no need to panic. You see red, it's a buying opportunity. You had one Bitcoin, you get this drop, add another one. You had 0.1 Bitcoin, 0.01 Bitcoin, add another 0.01, 0.1. However amount you're investing, add to it, because that cuts down your cost and it increases your profitability when price resumes. So in Bitcoin, we made 1, 2, 3 inside bars, right? Compared to the 19s, not inside bar compared to each other, right? So the term inside bar, I don't mean to confuse you. An inside bar is a bar that is below the high and higher than the low of the previous bar. So from that sense, we made one inside bar, and the next bar took out at least the low and the high. It didn't take out the high, but it took out the low. So that's not an inside bar. But the following day, it made an inside bar and an indecision bar, a doji. And then today, we're having a down day. Now, what is my expectation? Is my expectation just because we close this order block, we're going to go here? Absolutely not. And that's not what the charts are saying either. My expectation is we have closed this order block. I want to see a break of structure to resume. In break of structure, we will see it in the hourly chart, right? We form this W and we get a beautiful break of structure. We can enter here. We can enter with confidence down here, depending on what the hourly chart tells us. The other possibility is if we don't get a break of structure, is it possible that they want to close another order block before they take price back up? Again, don't panic, because they have a lot riding here. They want to take care of this, and they have now more short positions and long positions from this area that they need to mitigate as well. So price is going to come down. It's not going to stay down here forever. They're going to mitigate it. The difference between institutions and us, once we invest, we want to see results tomorrow. When they invest, they want to see results. The time component is not part of their thinking. They just say, I invest, I want to see results. So what is the big difference then? Is for them that result could come in 1 day, in 1 year, in 10 years, in 30 years. It doesn't matter. They're going to see results, because along the way, they're going to keep making a ton of money, and they're not worried about this mitigation not taking place right away. So if we understand this game, we can invest accordingly and say, oh, I believe in Bitcoin. It continues to go down, but I'm not worried, right? I'm not worried. It could even come back and test those 20,000 levels, close a couple of order blocks and resume. But for us, the way we know that the pullback is terminated, we see a break of structure in the hourly chart. We'll come back to that break of structure idea once we take a look at all of them. So we take a look at all of them from our weekly to our daily. In Ethereum, we broke the highs of the 2018, the late 2017s this year, but it immediately reversed. It immediately reversed because there was another significant swing high made in May that we broke out of. And when we broke out of that zone and we made a high, and then we had a pullback near the 38% retracement. In one bar, we came back and did that retracement. So this area now becomes an area where they could come back and retest. And what happened? In February, they came down and retested. This is what I mean by price. For whatever reason, if there's a major pullback, at least greater than 23.8% retracement, they will come back and retest that. In this case, they really took it further, but keep one thing in mind. They never closed below it. They just wicked it there and reversed it. Why? Anybody who was long here and had their stops right below this swing, they took care of you if you were playing with stops. The difference for me in crypto versus other asset class, in crypto, if I believe in it, once I'm in, I'm in. There is no stop for me. I know it has wild swings up and down. This is a long-term position for me. Short-term, there are those that are not, out of these 7, some of those that are, let's say, they don't have a significant platform or project or an idea that I am believing in, then I might just do, swing trade those, find opportunities in and out. But mostly my crypto positions are for the long haul. So you see this major pullback, price resumes, and then bam, they bring it down and then resume. This is why we're doing this. And then the 2017 area, this 2018, 2017 high, they broke that area once, twice. Now, once they broke this area, then they came back to it. Now, this doesn't follow my pattern because I don't see. So my pattern says, once you break out of an area, you have a pullback of at least 23%, resume, and then come back and test it. This is what my pattern says. In this case, we broke out of it. I don't know if you consider this the pullback. If that's what is considered the pullback, then this becomes, yep, they came to the, between the top and the low, right? So they came to that area. I don't know. Sometimes it doesn't work out that way. And for me, I don't have, so the pattern I would have been looking for is, once it did this for the breakout of this area, I would have liked price to do this, reverse, do this, and then give me this entry, right? That's what I would have done. However, if you look at correlation, crypto is not always correlated, but as an idea, if something comes down heavily, something like Bitcoin being the major currency, when Bitcoin comes down heavily, I know it's bringing down everything with it. Therefore, in Ethereum, I am anticipating price to come back down, even though it doesn't conform to my pattern. Even though I don't see the pattern where I broke out of this and I don't have a pullback to target. I don't have a pullback to target in this zone. Even though that is not there, I'm saying Bitcoin gave me that pattern. I'm believing Bitcoin to lead us there. Similar with Litecoin. Now on Litecoin, as you can see, those highs of early 2018, late 2017 were not breached until now. So this was not an area to look at. There were some areas. So down here, when we broke out of the 83 area, we broke out of it. We had a major pullback. Major pullback meaning more than 23%, and this one was almost 50% retracement. For me, that's a beautiful area. What does that tell me? At some point, they're gonna come back to this zone. Bam! They came back to that zone. I wish I wanted to do this session last week. I wish I had done it last week, so you wouldn't think that it's a hindsight thing. This is just how it happens, and unfortunately, I didn't do it last week as I wanted to do it. So anyway, so now the next area that we broke, the 261 area, in this space, it did not give me that significant pullback. Therefore, I didn't have any area where I'm expecting price to come down to, but we already know that this is an area that they're going to come back to anyway. So when you look at the daily for Litecoin, once they broke out of this area and they made that pull back to that zone, then we know when they came here, bam, they took care of it, right? So this drawing doesn't follow my chart, but once they broke out of the 80 area and they pulled back, and we know they're going to come back to this zone. We know they're going to come back to this zone, and they did come back to that zone. Once they break out of this, I normally would like to see break out a little bit before the pullback, but this is as valid. So when they break out of this area, they pulled back, and you know they're going to come back here when you look at the daily. However, because there was another one down here, they really came down after this. Because what I focus on for my pattern is on the weekly. So break out of it on the weekly, pull back. So in 1 week they did pull back. So break out, pull back, and if you look at the swing, the latest swing to high, and they came back to the 78.6% retracement. This is an area. I didn't see that earlier, I just saw it now, but it's okay because price came down all the way down here, closing some order blocks. That's why we draw the order blocks. This concept by itself is not enough, because they will terminate usually at an order block. And right now, that's where they're terminating, at an order block. That's where they're terminating. They could continue until we see break of structure in the hourly chart. The daily is not done making its move to the downside. Am I expecting for price to continue to drive any further down? No, I'm expecting a reversal anytime soon. But I let the charts tell me when that reversal happens. I don't trade what I believe, I trade what I see from the charts. XRP, let's look at the weekly, because I've already explained where we are. So when we broke out and we had a pullback and we were going to resume, even though we didn't resume fully, we know that this pullback area from this area from high to low is an area where they'll come back to. Now in XRP, we don't have a clean move up to come back targeted. It's the same concept as Ethereum. Bitcoin collapses, therefore it takes down everything with it. So that's why we see a collapse in XRP. I'm adding to my XRP position even more today because we see this buying opportunity. I'm buying today, but I'm not rushing yet because I want to see if they will come back for this order block. I want to see a better buying opportunity. It's at 68 cents right now. Can I get it for about 55 cents? Somewhere around the bottom of this order block. Can I get it for 55 cents? I'm waiting for that opportunity to come to enter XRP. Again, order blocks. They're mitigating their way down. They're going to mitigate their way up. And so you look at the daily, that's where I draw the order blocks. And so this is mitigated. And now we have left two on the top side, yet to be mitigated. And let me just add something to my drawing. Let me just change it slightly so that you know when it is an order block to the upside or to the downside. So I'll make it red, and I will save template as a bearish. What happened to my cursor there? Bearish order block. Oh, My order block disappeared. That's a bearish order block. This is a bearish order block. So that you know that at some point they're going to come and mitigate these. This has been mitigated, so we can take it out of the way. These there's the next one here that they're waiting for. You notice that the last price down before price moved up, this was mitigated, right? The April 21 has been mitigated already. Because it's been mitigated, we don't draw it, and I was just drawing the latest ones. So this one here was mitigated, and now we're waiting to see if there's another one to be mitigated because I want to take advantage of it. So XLM, this one, same idea, same concept, same theory behind it. As we break the highs, when we have a significant pullback, they're going to want to come back to that area. We break a high, we have a significant pullback, they're going to want to come back to that area. So we kept breaking these highs, we kept having pullbacks. So the only area that they haven't come back to is this one. Because we broke it, had a pullback, and we never came back to this area. So is it possible for XLM to come down here at some point and give us a fantastic buying opportunity? It is possible. It's absolutely possible, and I'm not going to leave that out of the equation as I look at adding to my positions. But this one is taken care of, this one is taken care of. So this one is the only one that is not taken care of, and these are already mitigated. And now we have some order blocks that are formed, and these order blocks that are formed, we're just going to wait and see what price does as it reverses. So let me do Cardano just one more time from our weekly to our daily. So Cardano broke out, had a major move up, consolidation, pullback. So this is the zone that I expect Cardano to come back to. In 1, 2, 3 weeks, boom, 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 it came back down to that area. We broke out of this next zone, but I haven't seen any pullback until this week, right? So you can consider this the pullback for that. And at some point, my expectation, remember this video, we're going to do this, and at some point we're going to come back to this zone. We're going to come back to this zone at some point before we resume again that uptrend. But for now, let's just, wait and see, because we just took care of this area. That's how Cardano is doing. So last set of lessons for today then is, how do we know when there is a break of structure? Break of structure, we can clearly see as we have started to mitigate multiple order blocks mitigated this. If you see it on the daily, you can see it clearly. This imbalance taken care of, right? I just wanted to show you that this imbalance taken care of as we are making those mitigations, as those imbalances are closing. Then what we want to see is, as price is making lower highs, how do we break structure from here? We break outside of this trend line, the hourly trend line, test it somewhere down here and resume. And boom, we make a higher high, we make a higher low. This is how you know you are done. Higher high, higher low. This is how you know you're done. Until you see this, you have not broken structure. And preferably, when you start to break structure, preferably you start to break this, you start to break this. It starts to give you more and more confidence as you start to head back up and start to take care of imbalance and order blocks. That's how we know that a pullback is terminated. That's how we have a break of structure. That's what I mean by break of structure. And all of them is the same story. Lower high, lower high, lower high. We want to see a break of structure. We want to see a break of structure. Higher high, higher low, higher high, higher low. That's how we know we have a break of structure. We want to make sure we're doing that before we jump in saying, hey, I am going to head back up. It is absolutely okay to keep adding to my positions. I have no fear in that because my long-term bias is that this is going to resume. It's a short-lived pullback. Short-lived could be even 1 year. Doesn't matter. My long-term outlook that this is going to take off. And these are the ones that I believe in that are going to do that for me. And, you know, like I said, there are some that I day trade and there are some that I have high speculations in, like SafeMoon, like Shiba Inu, Dogecoin. There's a Australian Shepherd. I forgot the last S. Is ASS. So another dog name. These are some of the ones that I have high speculations in, and I just hold them. But the major ones, my major ones are Z7 and Z7. I want to see termination to say, okay, great. You know, we're going to resume our way up. But for now, it's just for me a buying opportunity as it keeps dipping and dipping. But I believe our dipping is done for now. So all of them, that's how you do it. Hourly, break of structure to mean resume. If you want to start maybe trading these and not long-term holding, then you want to see a break of structure to understand that price has resumed its upward movement. So this is what I wanted to go over. The cryptos this week, it gave us a very good buying opportunity. What are you doing? Are you buying? Are you sitting on the sideline? I want to say one thing. I am not recommending to buy or sell anything. I am just teaching you how I look at the structures, how I think about my trades. This is purely educational. I want you to be sure. I don't want you to come back and say, oh, you told me to buy Cardano when it's 112 and it's now down to 110. It's down to 10 cents. It's down to 5 cents. I don't care where it goes to. If you're not doing your own due diligence to purchase, then I can't help you, right? My purpose is to educate you how I look at things. I look at this crypto as a long term for me, and I keep adding to my positions. But for swinging, I want you to break structure, break structure, break structure, break structure. This is where you buy. This is where you add. That's how you should look at it. And don't come back and tell anybody, doesn't matter who it is, oh, you told me to buy. No, a person will say, this is what I'm doing. Do you blindly follow, or do you do some research and add to your position or take out from your position based on your own analysis? If you're brand new to investing, if you're brand new to crypto, there is no rush. They're here to stay. So if you want to double and put some money, then risk what you can afford to lose. When you buy Bitcoin, if you can say, I'm going to buy one Bitcoin, and if this one Bitcoin goes to zero, I lose zero sleep over it, then buy one Bitcoin. But if you say, if this thing goes down to 30,000 from 32, I'm going to lose sleep over it, do not buy one. End of the story. That's how I manage risk. Money that is okay for you to lose. And if all you have to lose is 2,000, then don't put it all in one instrument, in one asset class. Diversify. It's hard to diversify with only 2,000 dollar maximum loss that you can have. So, believe in some of the cryptos that you want to go after, and don't spend all 2,000 in one. At least do 5 to 10, and as you have the ability to add more cash, you can just keep adding to your portfolio. But for now, this is not me telling you how to buy. This is me telling you how I look at things when I buy. This is me showing you how I perform technical analysis, so it can help you be a better chartist. Once you understand how to read the charts, you'll make better decisions for yourself. All right, everyone, take care. Enjoy the rest of your weekend, and I will see you on Monday morning when the cash market opens for equities, and I'll do my regular equity market analysis. Take care.